Good afternoon, everyone. BC Richfield coming to you live from London. It's just gone a couple of minutes past 1 p.m. for our slightly later show today. So I'm live all this week through until Friday. So I won't be live on Friday, but I'm going to be live tomorrow and on Thursday as well. And I thought we'd push a little bit of a later session today so that we can actually look at some market developments live together. I know a lot of the stuff that we do on the stream, we're looking at education content. I know typically on a Wednesday, we focus on the alt seasons. So today I thought it'd just be quite nice to kind of open up. Take a look also Monday, right? So jotted down here on a few bits and pieces. I see we took a look at Anchor, B&B and Algorand. So I figure it's a really, really good time for us to sit back and reflect on those, right? So starting to kind of build ourselves now into looking at constructing, real live trading days. I thought that would just be good insight for people. I know some people prefer the education content. I know lots of people come on here wanting to see kind of a little bit more about the trades. So hopefully this kind of brings a little bit of something extra. So this week I want to play around with some different ideas. You guys can give me feedback on what you prefer. And then from there, we can look to refine it so it's the very, very best experience for you guys. So first of all, just a few hellos because I can really see it filling up today, which is awesome. Really appreciate you guys coming in to listen to me twice a week. Most of you ramble on, let alone 4 times. We have a term in England called glutton for punishment. So I hope that's not the case. But do let me know, guys, as we're going through the stream, if you're finding it interesting, maybe towards the end of this. Going to try and keep them a little bit shorter if we can. Just so they're a bit easier to digest for people. So who have we got in here? Moral, first one in right through the door. Good morning first to you, my friend. GOT as well. Hello, Yakuza Kana, brilliant to see you, mate. Julian, welcome back. Nit, our dear Nit, and Erica as well. Seb, great to see you back. Seb, Whack, and Burned as well. Now, still the big question around where Kelly is. I know Hans has been really busy as well at the moment, but hopefully they get to pop in at some point, and obviously just wishing everybody well. So with that in mind, let's just cut to the chase, shall we? And in fact, let's just go and have a look. Let's just go and look straight away at what we were looking at yesterday. Yeah? So on our show on Monday. So we were, let's have a look. We were Anchor, we were B&B, weren't we? Let's see what we've got on here. I mean, this has just been, have just been wonderful conditions for, for our swing trading team. People sort of on the longer time frames who were, and our fundamental analyst team as well, who were really putting some incredible calls together. Not to mention Crypto Burb. Guy flies under the radar a lot, spends a lot of his time traveling, really trying to promote crypto, really trying to bring the very best people to the space. But quite often kind of goes under the radar a little bit for just what an exceptional trader he is, right? And with his system, he was into a lot of these projects very, very low down. So this is really, really cool, right? So we can see these random squiggles that we've drawn. We can look at the principles. Simon, hello, my friend. Hello, very much welcome. So look, our principle was this, right? We really kind of zoomed out on this, and we were looking at this in terms of looking, to dispel the myth, support and resistance, not dispel the myth of support and resistance, but just there's different ways that people approach it and there's different ways that people frame it, right? People will tell you support and resistance doesn't exist, it's supply and demand, and that supply and demand doesn't exist, and it's all liquidity. And so, at the end of the day, what we're looking for as traders are areas and key areas that give us high probability trade setups. So for me, whatever causes this along here, algorithmic price trading, whether it's institutions stepping in, whatever it is, for me, it's just very, very clear as I look back. If I'm watching these kind of clusters, see these highs here, yeah, and you get these real clean lows here as well, right? This is a point to which price had an expensive move here, came back underneath, tried to get back again, right? We then impulse that move higher, and what do? We hold here, right? Let me just zoom in a little bit for you guys. Then when we're holding here, we clear out these highs. Price comes back down to this level, comes back up again, and then all of a sudden, see how it just starts to get heavy here, right? So first of all, when we're looking at price getting supported in here, let's look at all these downside wicks, right? Just showing us that you're getting absorption here means that buyers are kind of stepping in. Then when you take out any key liquidity, right, I want to kind of really stress and impress this on you. Yeah, no, not impress you with it, but impress this on you in terms of the fact that we just want to sit back and make sure that we've always got our checklist of what we're going to follow. All right. I am exactly the same, right? In fact, really, really good friends of mine in trading, and not just really good friends, but some genuinely magnificent traders that I know, and not even ones that aren't associated with the nets, but you look at ones that are, people like Bass, people like Razor, people like Trading Tank, right? I mean, Pedma, Seven, who still to this very day will always be one of my favourite human beings and traders. Greg, hello, mate. Not at all. Still rambling, my friend. So you've made perfect time. All these people, what they all have in common is that they push so hard on data. Yeah. So regardless of what your trading style is, there's this brilliant saying in this motivational video that I watch, and it says, that basically trying to master something doesn't come from, wanting it. It doesn't come from, being born with it naturally. It comes from hours and days and weeks of beating on your craft, meaning that don't just sit here just staring at charts all day, get in there, really focus on it, make your practice important. And that's what Tiger Woods always said, there's practice and there's real practice. Yeah. Put pressure on yourself. Don't just sit there hitting golf balls down a range at no target. Make yourself focus in on the target. And if you don't hit it, there's penalties for it. If you do hit it, there's rewards. Okay. So what we're going to do today is try and kind of speed this up a bit and say, okay, let's look over what we did yesterday. Let's look at what we've had today. So there was a really, really nice setup this morning on Euro USD, for example. Unfortunately, I just couldn't get onto Twitter in time to share it. But a lot of that is due because we've got our Congress event coming up, right, which is so exciting. Some of the speakers we've got confirmed for that now. I'll give you guys a little update on that later, but I won't kind of plug that too much now. And Marcelo, hello, my friend. So this is what we were looking at, right? The reason this green line is here is because when we kind of look back on this, bearing in mind that we drew this in here. Oh, no. Good afternoon, bud. We drew this in based on this kind of understanding here. The fact that we had these lows coming in set where we were getting absorption, we ran some highs, price came back down. Remember, like I said, in terms of getting a strong close, yeah? So this is a strong close. High volume in the body, not too many wicks. See this one? We tried to come back down here, but look how quickly that got bought up, right? Now, the fact of the matter is here with this, I would then be monitoring the next candle to see the same kind of long wick, small body, to see that we were getting absorption, right? Or a bullish engulfing. So a prime example would be this here, okay? And why is this? Because we get this long tail wick down here. We then set this pin bar candle, right? So for anyone that doesn't know, I've got a thread on those on my Twitter. I can reshare that as well. I probably should refresh that anyway. But a pin bar candle is a really clean example, is one like this. Yeah, where what you get is you get a long tail and then you get a small body, right? This is the cleanest example, this one here, right? And if you get this little bit at the end, it's called a nose, right? You don't want the nose to be too big or it starts kind of moving towards being more of a doji candle, like this one, which is a little bit of an indecisive candle, meaning that it's kind of running both sides and it kind of sits in the middle. So why is this important? Because we had price try to move below this level, right? We then came in and wiped out these relative equal lows here. That's taking liquidity. Let's remember, or I always remind myself, look, price is either looking for liquidity above an old high or an old low, or it's looking to rebalance an inefficiency. Yeah. So by that, price is moving technically always from external to internal liquidity. How we change bias on that is when we violate that. Okay. So let's use this as an example. Okay. So we've taken external liquidity here. Why? Because there's a swing low. Yeah. Price runs that. Now, just looking at the candle patterns here, we're holding our green line. Bearing in mind, we've established this. Look, we didn't have this data here then, right? But what we did have when we look back is this data. Yeah, support. What happens here? Strong close through. Retest. What does price do? Takes out external liquidity in the form of this low, and not just this low, right? You draw your eyes back to this low as well, making relative equal lows. Yeah, what we see as engineered liquidity. So what happens? Strong close through. Look at the volume in the body of that candle. Yeah. Price then comes back. This forms an inside bar. We're not going to go into that too much today, but it does. Then that's normally a reversal candle or a point of decision that the market is making its mind, whether it's generating liquidity to move higher or lower, or whether it's actually looking to reverse. So When we start overlaying these points, what can we then see here? Well, strong close below, retest of this key level showing it doesn't want to go above, and then two really important things. One, a bearish engulfing candle. The body of that completely engulfs the prior candle, showing bearish momentum. And then what do we say? If this is external liquidity here, just draw this in. So if this is our external liquidity here, which is this low, then our expectation is for price to then head to internal liquidity, right? So here, which is our internal liquidity. Okay, makes sense. And then what we can see here, we're then looking for the same thing. We set a clean low here, right? And I'm pretty sure as we look back, we can see that along here we've got a historic low that we're kind of driving into as well. So same principle. Here's our external liquidity. Move that down to here. Price rips through that, yeah, leaving this fair value gap here. Yeah, so now our expectation is external liquidity has been taken for price to draw back into internal liquidity, which is in here. We're not going to focus too much on our premium discount ranges and stuff like that. I've covered that quite a lot in the last few sessions. So if you are interested, please do watch back to some of the videos. And if you've got any questions, you can always reach out. Ricardo, hey buddy. Hey Ralph. I know it's you, mate. Good banter. Enjoy that. So external, yeah. And now this becomes our draw, which is internal liquidity down here. So remember why I said how we then dictate where price is then looking to go is we then look for violations. Yeah. So see, we've got this close above here, right? Then all of a sudden it looks like we're going to chase down external over here, right? And we look that, we run that as well. Proper East Londoner. Yeah. Yeah. I mean, I'm probably a bit soft as it comes to these days, mate, but the old, that's certainly where the family are from, the good old East End of London. So they're the principles that we're following, right? Again, apologies to go over that again for anybody that was in the last few streams, right? But just looking at that in principle, because it will give us some really nice context for where we are here, right? So as we zoom in, we're going to look at what's going on with price action here. Now, it's very, oh no, Ricardo, no disrespect taken at all, mate. I'm a very, very proud Cockney boy. I just lost a bit of me twang over the years, that's all. So what we can see here is a really, really healthy price action, right? You see when price kind of gets into these ranging situations, yeah, this gives us really great opportunities on lower time frames. Sometimes actually with the type of systems that I employ, as price starts to run hot, starts to trend, then, you know, you've got to make some higher risk-based decisions. And what I mean by that is that typically I'm looking for expansion ranges, dealing ranges, where price kind of moves to a certain point and then retracts like it would on a Fibonacci retracement back into the lower 50%, right? To give me a high probability setup. What you'll find with trends like this, especially in crypto when they really take off, is that they can just take off incredibly hot, right? So one thing that really kind of changed for me when I suppose when I really started taking trading seriously and decided I wanted to pursue it as a career, was understanding kind of current price and what's happening on the other side of the curve, right? So what I mean by that is, and again, that's what you're looking at in kind of your traditional support and resistance roles. So when you're in a bullish state of play, right, when you're in a bullish trend, you've got your bullish bias, you want to see the down close candles support price, yeah? These should be creating a base for price to then move up from. And again, if we look back at our candlestick patterns, long tail wick here, yeah, driving down into this order block, look at the bodies respecting it, and it moves away. So without kind of muddying up the charts too much, let's put this on where we currently are. Okay. Now, this is up to you in terms of parameters for how you study this, whether you're drawing your order blocks to include the wicks or you're just allowing for the bodies. For me, especially on the higher time frame, I pay a lot more attention to the bodies of the candles. However, if you do get them followed by a fair value gap, then I can see that sometimes is more of an indication that price is moving away aggressively, that the buyers have stepped in. So where does that leave us today on Anchor, right? So I was bearish yesterday unless we did this, right? we needed to get a close above, and then we need to build on this high, right? So see this little squiggle of a line here? That should have represented the closing high of yesterday's candle, right? The idea being the price is going to move up above this, and what we'll do is we will just highlight them together so we can, well, we need to highlight them together, I suppose, to it's pretty clear and obvious for us to see. Break, close this candle above to show some strength, like not the highest volume body. If we saw a larger volume body, give me more conviction. We then want to look at this to form a base, price to consolidate on the lower time frame above this and move up. If not, we're simply looking for rejections back down into this order block, okay? So let me just get rid of those so this is nice and clean. Now, what I'm going to do here is I'm going to move down quite aggressively here to the hourly. Right, for those that don't know, the little dots at the bottom represent the session kill zone. So London, New York AM and New York PM. That's when I'm taking or favouring taking my trades for high probability setups. And then today we can see, as we got with Anchor, we got the Euro USD, and we've had a little bit of DXY showing a bit of strength today as well. So risk has had a little bit of a pullback. I'm not a hugely active trader of the London session, actually. I am for Forex, but not so much for crypto. So for me right now, this puts in a really interesting situation, right? Because we're down on our hourly and we're saying, look, we came up and we formed this. We wanted to see this hold and for price to consolidate above. Look how this line, is just holding price down. Bear in mind, we just drew this line Monday, right? We just looked at some key levels and said, okay, where price is it roughly holding? Is this line perfect? No. Could it go up to here a bit more? Could it go down to there? It's more of an area, right? What it's looking for is think about it in terms of acceptance, right? Now let's overlay our rules on this and let's look at some actual trade setups. This is our external liquidity, which I'm going to just label with a red line. So when price goes up and takes external liquidity, we then expect it to draw to internal liquidity, right? So when it took external here, drew up where to this very small FVG here, right? Before price then comes back down. Now we've taken external liquidity again. Well, then if the theory is correct and our bias is correct, then this fair value gap here, which we're going to do in grey, then this is where we would be looking to take shorts in our New York session. All right, from here I would typically then drop down to the 5-minute chart. And what I want to see here, which we haven't quite got yet, is I want to see some highs taken out, right? So if we took this as an example here, we've stepped into our session, then, okay, what we've done is we've taken out a low here and we've got this little fair value gap. And some people will say, okay, well, you've kind of swept a high here, although you haven't because they're equal. Often when you see these equal highs, you can see them as engineered liquidity, right? So there's countless times that the market just wants to take them out, right? So let's look at that. And then we'll look at these ones down here as well, which are our equal lows. So if our bearish bias is correct, now bearing in mind that our higher time frame bias is still bullish, right? We're looking at this as an intraday bias, saying we've had a rejection at a key level, right? And the expectation is that this has dropped down now. If price is going to reverse in here, then we want to see a signature that allows us to, have a good idea on where price is going to move to. So here was our liquidity taken out, right? In doing so, what we also took out here was Asia's low, right? You get liquidity resting beneath Asia's low. So when it did that, which is also happens to be the low of day at that time, we're now running down, but we've tagged this bullish order block, right? Now, just because we rejected this key high time frame level doesn't mean that price can't now find some more buys in here and have this big expanse up. That's why I don't just want to set limit orders, right? What I want to do is I want the market to give me some kind of indication. I would love to see this kind of move where the market comes, takes out liquidity, right? Comes back down, shifts structure, right? Returns ideally to a fair value gap. And then we're looking for price to move lower, okay? So we see a sweep on liquidity, right? So we've engaged the stop losses above here. So anybody that was short here get tagged out. What does that do? Creates a load of buy orders, meaning that if the market conditions are there and the want is there from larger accounts or collectives, smart money as ICT would call it, etc., institutions, basically, they can take the other side of that bid, right? So People are up here, these turn into market buy orders to stop them out. They can fill all their sell orders there, or as many as they can with limited slippage. Then we look for the signature in this move lower, right? Meaning that we then want to see a fair value gap left in here, which would give us the opportunity to get involved. We clearly identify where our risk is because it's been left with the previous swing higher. And then we take our original target, right? Now, obviously, this is just a mock-up, but realistically, I would want this at the first target point. My expectation would be for a deeper correction, right? But I'm a very risk-averse trader, so running these equal lows for me, I'd be looking to move my stops to entry, yeah, or possibly even considering taking a little bit of profit. But again, what I would need to see, and if we adjust this down, yeah, first of all, I still need to see a strong move above this and then a strong move down with displacement, meaning we're leaving fair value gaps, right? Showing us that the orders can't pair fast enough. The sell pressure is there, and that's when we want to align ourselves with institutional buyers and sellers. But I do want to see a decent risk to reward, right? Meaning that I want this to be at least 1.5R. So it depends very much where this higher finishes. And also if we get our breakdown pattern, that's what we're looking at on Anchor. So let's take a look at BNB as well, shall we? But does that make sense, guys, in terms of how we can just take that from a daily perspective, drop that down onto kind of like something like a 1 hour? Other people use 4 hours as well. And other people will cycle through the time frame. There's absolutely nothing wrong for that. What I find is I end up with too much tight stuff on my chart, right? And that often you'll get a good hourly fair value gap that will be sat inside a 4 hour one, for example, right? If it doesn't look clean, then I'm just not interested in trading it, right? I've done this for enough time now where I've chased trades. I've wanted to enforce my will on the market, and it's just, bitten me in the backside. It does. Awesome. Erica, Julian, beautiful. Yeah, if it doesn't, guys, please don't ever be shy to speak up or just, I'm not making it clear. Let me know, because we've all been here, in this situation. I was very lucky to have some amazing people, including ICT, to work under when I was younger. Trader SZ, Burbers, all these people I've been really blessed to have kind of, whether it be through webinars or actual contact, all that side of things. So it's nice to kind of share that experience with people, and hopefully, I'm not saying copy what I do by any means, but hopefully it kind of helps give a reflection of my journey. Whack always comes with good questions. What have we got today, mate? Let me pop it up on the screen while we're on this one, and let's take a look. So, hi mate. When you're rebalancing a fair value gap and or an order block, apart from seeing a directional change via a reversal in structure, are there any other signs signal for a potential rebalance? Okay, so let me see if I understand what you mean here. So let me just give a quick explanation here, Whack, and if I'm wrong, yeah, please let me know. So in terms of, especially with order blocks, First of all, I'm looking for high probability order blocks if I'm looking for an order block. And that is one that takes out a high, yeah, or low. Yeah, so it's basically at the start of a move. Then you want to see price move away, ideally have a fair value gap after it. So for me, for example, this here, or these, because they're adjoined, you see these up close candles here, would represent a high probability bearish order block for me. So if price was to run really hot here and come into this, again, key resistance level, high probability order block, we can see how price closed below it, retested it, and then really shot off. That gives that a lot of weight for me, right? So if I was to see price close above this and start to hold it, yeah, then what I'd be seeing this as is much more of like a mitigation block. Yeah. So that's where things that should form support become resistance. And a good example of that, a lower probability one, but as we're talking about, right, our down closed candles should support price, right? So what happens when those down closed candles fail to support price? What we do is we align that with our bias, yeah? So that's our order block. Here we're expecting support. Doesn't quite tag us in, yeah? But when it gets to here, you see we don't see any strength, right? Now, like I said, we want to then tell the story of price, right? So what's happened here? Price has swept a high, yeah? Taken a high, taken liquidity from the buy side. So we've taken external range liquidity. We then expect it to go to internal. So we expect this to support us. But what happens? We close beneath it. Yeah. So as the candle closes beneath that here, we immediately see that as weakness. We're then looking for this to reject price and become a mitigation block, meaning that on the 1 minute chart, we would be looking in there for our signature breakdown pattern, chasing down the lows. down here. That's how I would approach that. I'm not sure if I've got that right. I don't know if I've got that right, Wax. Apologies if I haven't. In terms of order blocks, in terms of fair value gaps, in terms of rebalancing, a couple of things that you might mean in that respect. So, first of all, let's look at what we would do very, very similar to how we would use mitigation blocks, right? So, with this, our theory is that price has done what? Yeah, it's come up to here. So, it's come up to take external liquidity. See, we take that higher. Yeah. Rebalance internal liquidity, move to external liquidity, come back to rebalance this area, probably the order blocks here that were confirmed when price moved above here. But once again, what happens? We close below. Now, you really need to kind of zoom in. And to be honest, I would be on the fence with this one as well. We get a very, very small close below. I'd want to see a little bit more. But what I would then look at is then getting this drop. I would then look to this mitigation block and say, okay, now I'm pretty certain that these two should act as really, really good resistance. And actually, when we overlay everything we've just discussed, yeah, in terms of high probability bearish order block, inverse fair value gap, which I'll draw in properly in a second because we have them purple, and then our balanced price range, our mitigation block here, which I do a lighter purple, which I know is confusing for people, but to be honest, I'm running out of colours, I think, right? So that's an inverse fair value gap because we closed below it, yeah? This order block shouldn't be letting price any higher. Why? Because we've taken key liquidity. We've now broken away from that with a fair value gap, showing us that price wants to price lower. We then have this here, which is a mitigation block. It's a down close counter, so it should be supporting price. So on the close below price here, yeah? If we let's just put that on there for a second. What we would do is we're just going to be hunting in this range here. Let me draw an arrow. And because time is fractal, guys, once we get this close below, so we're ready to trade the next candle, we're looking for our breakdown pattern now on a 1 minute. But price is fractal, right? So this going from a 5 minute down to a 1 minute could easily be you going from an hourly down to a 5 minute or that kind of thing. But do make sure that you've got your kind of screening system in place. So from this red arrow is go time, right? Now, we didn't happen to get a trade set up here, but remember the parameters that I told you. We need to see a sweep of a high. We then need to see a shift in structure, which was here. And what we'd be looking for here is for price to drop here and return to here. Now, where we have a sweep of the high, the one opportunity that you could have got in here would have been your breaker. I don't even know really if price would have tagged you in there. It's looking incredibly clean on this, which it can do, obviously, on these lower time frames. The reason that that's a breaker is that's the last up close candle, right? Sorry, down close candle, which is this one, before we have the move lower. So down close candle, forcing price higher, leading to price moving lower. Yeah? So hopefully that makes sense, guys. But that's what you'd be looking for. I'd actually be favouring a return to this fair value gap here, which we didn't get. But again, it's not about being right. Price isn't always going to deliver as you want it to deliver, right? The key thing is that we're following systems and rules that we put in place. So great. I hope that was clear and I didn't make that too convoluted for you, Whack. But basically, look for your inversions. Base this around your key levels. Let's move this back to a slightly higher time frame. But again, we have to wait for our triggers, right? That's the really, really key thing for me. I think where people go wrong is they get really, really excited. They want to jump into these trades like this one here, right? It just looks like you want to trade it lower, right? It's moved up. It's come into our fair value gap, right? What have we done here? But have we got a sweep? I mean, you've got relative equal highs here, right? I'd want a sweep of this really just because I'm just not sure why price wouldn't want to take that. However, we have got these equal highs here that price has now swept. Hopefully you guys can all see that. So in terms of this now, if you got that high energy breakdown, you'd be looking for the same kind of setup that we're talking about here, trading it down to those equal lows. All right. So let's take a look at BNB, shall we? Now, I imagine obviously most crypto is going to be fairly aligned apart from some of the real kind of key outliers. So we would have seen that corrective move on a few. Let's see if we kind of had that alignment on BNB. Okay, so we can see here what we were looking for, right, on the low time frame. Let's move this down to the 5 and let's see if we If we got our pattern here in premium discount, we got the range left there set up and everything as well. Again, we're now back below our key resistance level here. So this is, screaming pullback territory. No, see, it just ran too hot here, right? This was the key high we were looking at. We were thinking maybe we get a rejection down here. Price comes back down into this area to retest and hold. If we get that, again, that same pattern, a sweep of the low, price moves back above the high, then we could look to be long here. So while the bias was correct, the execution didn't give us the opportunity for the triggers to get in. That's not a problem. Am I going to sit there and chase trades like that? Absolutely not. Because when we zoom out, what we're doing is set on our parameters and our rules, right? So the reason that our expectation is to be short biased from here, yeah. So remember, the reason we were long biased there is because we closed, candle closed there, yeah. See that before taking out liquidity. So always ask yourself, well, why would price just be rejecting here? Yes, it could be a strong rejection of this order block, right? But is that enough? Is that kind of me trying to kind of make something up a little bit, feels a little bit forced, right? Where this here, we've got the up close candle, taking out liquidity at the highs, price breaks down, retests it, sells off quite aggressively, right? When we reject, we move into this, there's an expectation for a corrective move, right? But we'd already done that, yeah, in the previous day. So for me, if we were going to have that rejection, we should have seen the day open, trade up, and then come down. Yeah. So our open, high, low, and close. Yeah. You're very welcome, Whack, and very, very welcome, those on. Actually, do you know what? I've missed some questions here, haven't I? So let's just have a quick look. How about the candle body for higher probability OBs? Yeah. So to be honest, studying ICT for years and other really, really good exponents actually of order block use. For me, I've always really favoured the bodies, but what I tend to do is if the order block is followed immediately by fair value gap, I will take the wicks as well. However, if it's not, then I favour the close of the body on the low for this up to the wick of the high, and vice versa for ones at the low. Yeah. So, for example, we have this one here. Yeah. Down close candle takes out liquidity of the lows here before we get this reversal. So then I'd be saying to myself, okay, well, actually, these are all adjoining candles. So I'd be looking to take all of those, but from the height of the body, right? And basically what I'm saying is I want to see price in this area hold and give me a signature in here that I can trade. And actually, even here on the daily, we can see swept to low. And this is a good example of how price is fractal, right? So we've swept to low. Let me just do that, get our red back so it's a bit clearer. What do we then want to see? We then want to see a shift in structure, right? So that's the high taken out. Why is that a shift in structure? Because we're going down, we've set a lower low, a lower high, higher low, higher high. So we've actually got a market structure break here. These lines often quite important to look at. Again, as price struggles to get above, we get our high volume body close, price then moves away. But what we're interested in here is before that, is we get our move higher, then what are we looking for? If we've taken external range liquidity, price is hunting for internal range liquidity, right? Which is this. So we can then be buyers in here, right? We've got nice targets above us. We've got these equal highs here. Again, when you see really key liquidity, take a look at it, and we'll favor this one because this is the higher of the two, but then draw it across. Strong close, this area being used as support. This should give you encouragement to drive down onto the lower time frames and then look for those kind of continuation trades higher. So Simon, in current market, is it better to have anchor in a pair to USD or BTC? Okay, really good question. Actually, mate, do you know what? In truth, that is that's not something that I'm actually that knowledgeable on. I'm always really, really honest. I just trade the USD pairs. I know some amazing traders like Bast, Resume. In fact, I think most of the other guys at the Bird Nest will trade the BTC pairs as well. But where I move between traditional markets and crypto, I've always stuck with USD, USDT, or USDC. So sorry I couldn't be more help there, mate. But I tell you what, pop onto the chat on TBM, and they will absolutely furnish you with some much better advice than I could give you. So yeah, burn small body, low probability, large body, high probability. Yeah, I suppose it's the way I look at it, and I think SC is the person that probably captured this best for me, which is this. So Small body candles, yeah, lead to big body candles. Small body candles lead to big body candles, right? And then all we're looking for as we do this, we're looking for our down close candles or these consolidations, as he'd look at them, which I think is actually a really good term, uh, to then support price higher, right? And when you're looking at that again, remember, like we said, if I'm allowing for the wicks all the way up here, then it's a really, really big area, right? Some of these things are a little bit open to interpretation. I'm always honest about that. But what I'm looking for fits my rules. It's a very rigid system. Again, it's not something I'm saying is right or wrong. It's just from my own testing. But these are the order blocks I'm interested in. Why? Because they're adjoining candles. That's the corrective move that happens after this impulse move higher, right? What happens here? We take external liquidity, yeah, and then we're looking for internal liquidity in the form of this order, in the form of the order block. Sorry, even I'm doing it now, in the form of this fair value gap, right? So that fair value gap gives us our chance to be a buyer, right? Then when price moves above here, especially if we get a close above, we're looking at this to offer support. Price sets this nice pin bar candle for us and ultimately runs for the highs. Now today, the bearish bias is purely based on the idea that this trend has had this real kind of hot run from here. Yeah. So if I want to drop this down onto an hourly now and show you why I'm short bias at the moment, pretty much across the board, is really kind of because of this. Let's get rid of the old TA from yesterday. We don't really need that now, do we? Right. So we're going to very, very briefly touch upon our premium discount, yeah? And especially in this case, our displacement leg, okay? So what I'm looking for is what would be known as a dealing range. For this, I would always recommend going to the core concept of this. I learned this many years ago off of a gentleman called Michael, ICT. He's got a lot of amazing content on YouTube. What I would say is go to his content. There are some good people that kind of share his stuff. I always accredit him, which is, right, in my opinion, the right thing to do, as one of the most important mentors that I've ever had. But again, it's my interpretation of his work combined with other traders that I've studied, ranging from Larry Williams to Trader SZ to Burb to all these people over the years, to find a system that works for me. So, I'm not saying that this is the purest way of how he would teach it, but I'm pretty sure it's pretty much bang on. What we want to see is a sweep on liquidity, right? So let's just for a second, let's look at this example, right? So always, and I know I reiterate this, I'm not trying to be a twat. It's so important, right? So no matter how we're kind of conceptualizing this, right, we have taken a low here, yeah? We can't deny that. So we've taken liquidity from the lows. What we've then done here is taken liquidity from these highs, yeah? So what we've done here is we've created a range, because the range has swept liquidity of the low, swept liquidity of the high. What do we do when we trade in a range? We trade from one side of the range to the other until it breaks, right? But we always make an allowance for a midline. The same principles apply here. What's this? External liquidity, right? So where's our expectation that price is going to head to next? Internal liquidity, right? So after this sweep, we create this fair value gap. Let me just delete this stuff a minute so this is nice and clear for you guys. It's all getting a bit muddy in it. Right, external liquidity. And again, guys, please do shout in the chat if this isn't making sense, yeah? To internal liquidity. Now, as we look at this here, before we come and take out this higher, price moves into this, we would actually be short bias here. Why? Because we've shifted market structure as long as it was aligned with our high time frame bias, which it wasn't. We were aiming for this line, right? That's why we were looking to be long yesterday. Short today. Why? Just this red line and the order block, the big blue box. Because all of my analysis, as I would find with most traders that do this, is based on a higher time frame. I'm not trying to let a lower time frame dictate bias to me. I just want to find execution on there. So when we're looking at this, I'm thinking, all right, well, if this is a reversal and I'm wrong about price getting to here, then price should reject here and move lower. If it does, within my New York session here, I'm going to get the opportunity in the PM session to trade this lower, right? Brilliant. However, what I'm actually doing here is I've actually got a long bias here, right? And now if we overlay the same principles I just discussed, this low has taken out this, right? So if we're looking for our range, we're going to draw this in. So we take the low out, we create a dealing range for ourselves, yeah? Or even if we take it down from this low, which I would agree is a bit more clear and obvious, right? We've had a consolidation here, we've swept liquidity. You're left a high probability order block that's retested. Again, I know I sound like I'm going on about this stuff again and again, but it's just such a good way to kind of get it into your minds. Not your minds, one's mind, right? High probability order block, price moves away, we've swept liquidity, expansion leg, we then shift structure here. This becomes my dealing range, right? I then have a high time frame bullish bias, right? So I want to find my fair value gaps and my order blocks that are down here in discount, because this is where my high probability setups come in, right? And actually with this one, set this down close candle, then we get that lovely fair value gap afterwards. So I would overlay the two. Doesn't really matter that sometimes it certainly does. Gives me that extra conviction. So then on a low time frame, I want to be a buyer here, right? So hopefully that made sense. I'm going to draw that all the way back over here and line it up so you can see that's our premium discount. We want to be shorters from premium, longers from discount. That's how we would have got the setup. Now, that bullish bias remains intact. What we then do, moving here into this day, is we take this low, yeah, and this high. So price is traveling from external liquidity to internal. It travels to internal here, right? And we close above it here. This gives us the conviction that that's now become an inverse fair value gap, meaning that it's failed and should now support price higher, which we see it does here. Yeah? So with that in mind, as we drag this on to the next day, we've all of a sudden got ourselves a rather chosty dealing range. Yeah. So when the day opens, it would have been this high. Then as it moves up, it's this high, right? All you're doing is you're taking it to the high is set by your down close candle. If you then set an up close candle and go higher, you expand the range, right? As long as you don't start taking liquidity again, then you set a new range. So as we come into the London session here, this is where you want to be a buyer. Price is finding support here. Let me just move the price range back over here as well. So again, it doesn't get in the way too much. Price is finding support here within our inverse fair value gap, right? So now we're saying, okay, price has taken external liquidity here. Where's it traveling to? Internal liquidity. Where's internal liquidity? The bottom 50% of this leg that took liquidity from the low and the high. This is then where we hunt for our long setups on the lower time frame, right? But the only reason we can do that, why wasn't I long yesterday BNB when we got to here? Because my New York session that I was trading, we closed above it. Then it's no good to me, right? Because then I'm guessing, because I don't know what price is going to do. Is it going to hold? Is it going to find acceptance? Or is it going to reverse, right? So when I step into today, I've got a short-term bearish bias, even though my high time frame bullish bias is intact, because I'm looking for the corrective move, right? And then all we have to do, all I would suggest to anybody, just some of the best advice, is just make sure you keep zooming out. Yeah, whatever your higher time frame is, whether you're using a daily, whether you're using a 4 hour, whether you're using a weekly, a monthly, right? Zoom out and make sure you have the context. Will you be right all the time? Absolutely not. Do you need to be right all the time? No. Does being right matter? Not at all, right? Egos drive this industry massively, and I'm pretty much certain that that plays into a huge factor of why there's such a low success rate for professional traders. You've got to learn to accept being wrong. I think it's a very difficult thing for people to do. It definitely wasn't easy for me, because you want to be right. You feel like you get validation from it, but the truth is you don't need to be right or wrong. Your job as a trader is to create a system that's profitable, right? And if you can have, like Burb does, for example, a 30% win rate, or my dear friend Razoon, who had a brilliant chat with Razor on Monday night, and he's been scalping the living heck out of NQ recently, which is NASDAQ. And with like a 32% win rate, but that's his average R on that was like 2.6. So that's really profitable, right? But that's why you need to decide what type of trader you are, the time frames that you want to take the trades on, because this can be applied across different time frames, right? But the time you can bring to the charts and your levels of patience, levels of concentration are all definitely really, really big factors. Okay, so we're going to finish up. So hopefully that was clear and not some convoluted ramble, I always think it's either going really well if the chat's quiet or really badly. I think at one point we dropped from about 50 people down to 9, so I imagine I lost a few there, or we had a little bit of a little bit of a downtime on the server. But let's finish up quickly just by looking at Algorand. Again, like I say, these a lot of these crypto projects are going to be in very, very similar light. So what did we say here? Well, our interest in this was we had these equal highs, price ran up, we had that nice strong close. I've learned right or wrong, it's irrelevant. Risk management is what matters. Absolutely right, mate. And I tell you what, Larry Williams, one of the most legendary traders of all time, someone that, Burb has unbelievably got to meet and share some incredible times with. He was the largest percentage winner of the Robbins Cup by a long way and one of the only multiple winners. And he did ridiculous returns, ridiculous. He's got plenty of books out there, real kind of godfather of the space. Really do kind of look into him if you get the opportunity. Thank you, Erica. That's what I was hoping for, Dominic. I knew you'd jump in there with something reassuring. But no, he's an unbelievable bag of knowledge in this space. And when they said to him, look, you must just literally be one of the most gifted traders of all time, or you outwork people, what's your real secret? And he said, I'm actually a very average trader, but I'm an exceptional money manager, meaning that his risk management and his management of money is unbelievable. Brilliant. I'm really glad you enjoyed that on B&B, Marcelo. I know sometimes I can go a little bit fast through these, so I do apologise for that. But let's just finish up on a real swift one, shall we, on Algo, and let's look at where we were. So again, look, we closed above this level, strong close. So Monday, the idea is, do we come down and treat this level with respect? On our buying days, remember this, when you look at candles, on our buy days, on the daily chart, we want to see price open. Yeah, can you guys see that right? Trade down and then expand higher. Close. That's open, low, high, close. On bearish days, we want to see price open, high, low, close, right? And then the idea is that we're chasing these lows down, right? Sweeping liquidity at the highs to chase down the lows. Always external to internal liquidity, right? Another example of that, external liquidity taken here comes to rebalance this fair value gap here. Slight bullish reaction, fair value gap fails here. So where do we naturally gravitate to? These lows. See these equal lows? So price closes there, you get 2 beautiful days of down trading. So simple things like this can be really important to remember, right? So when we're bullish, so we were bullish here, bearish here. Remember? I know it sounds the same. This is why I wanted to do these days back to back, so we can look and you can hold me accountable for what we're talking about. You can watch on the previous streams if you have any doubts, right? I'm not here to trick you. All of this stuff is live and public. So unless I'm just remembering things incorrectly, which is definitely not beyond the realms of possibility. But we expand higher here. We have a strong close above this key level, right? I'd want to see from equal highs like this, a stronger reaction back down. The fact that we held here, the plan was we retain our bullish bias. Why? Because we have this really tempting key high over here. And if we hit that, we would then say to ourselves, we would be looking for a corrective move back down to this fair value gap that was created here, right? We wouldn't know that until this day closed. That's why we had to have that level of kind of insight, because that day could have just collapsed down and closed that fair value gap, and then we're back within this order block. So when we had this close above, our premise for the day, which we'll zoom into here, I would actually, thankfully, we did on the lower time frame draw some arrows in. So let's see how that worked out for us. What you'll notice with quite a few of my setups, right, is that price doesn't actually come back down all the time and get those entries. Do I let that phase me, and do I then carry that plan across? Just absolutely not, right? So what we want to see here, if we're going to look at this play out now for strength higher, we need to expand this range up. That's not doing it post. It's purely because that was our high at the time. So because we've now failed to set a new low, we just move the range higher. Is this fair value gap still valid? Absolutely. So what do we want to see today? On an hourly scale, well, the plan remains this. We've taken a key higher, so we would be looking to scalp short, right? So that means key high taken. Remember, difference between high time frame and low time frame. Higher time frame, we expect a reaction here. But on a daily, this pullback here is just a minimal correction and price can move higher. On the hourly, it looks more serious and people start getting ready to sell off here. For me, once we've run this here, I would look to be a seller here in New York PM. We didn't quite get that. The sell-off actually happened over Asia, which quite often means we've got the sell-off in Asia, continuation in London. New York AM, which is the session we're currently in here, is quite often consolidation, right? So as we're now down in our discount, yeah, meaning we want to be a buyer here, we can see by our pattern what we're looking for. This is where we can look to see if the market's going to give us any signatures that it wants to go long, right? So once again, when we look at this, we say to ourselves, okay, well, what would we want to see? Well, we want to see sweeps, yeah? We need to see liquidity engaged with, right? We want to see these sells. So people that were long here, people that just put a long order in this fair value gap, or people that have their own systems, perfectly valid systems, not to criticize anybody, right? But there's a lot of stop losses accumulating under here, right? So with that in mind, for me, I think if I want to go long here, I'm thinking, right, okay, what causes maximum damage? Wiping these people out, yeah? Coming back above this, shifting structure here, coming back down to here, and then looking for price to get back up here into premium. Because from here, we can hold positions, we can have our stops at entry, we can leave runners, etc. Right? The key thing is that what it affords us, let me move this up a little bit. It affords us good risk management, good understanding on what price is doing, right? And then from here, we're still waiting to see this signature. This, by the way, which I'll just change in a moment, is actually a fair value gap. And then we would say, okay, well, where's price likely to come into here? You can choose, say, these order blocks, right? I think that's the first kind of area. Here we see this point of consolidation. The expectation would be for price to run out this high, but we don't know it's going to do that. We just want to be patient. And we can even say to ourselves, well, let's look at our dealing range here. So what I've done is take this Fibonacci from this low to this higher, and then we can see how these align really, really well, yeah, with the high time frame version. So if we do get this move, but this is just a corrective move higher before continuation lower on the higher time frame, it allows us to catch a piece of that move and get out at break even or with a small bit of profit, even if we're wrong, right? So all we're doing is decanting high time frame moves down onto low time frame plays. Okay, so let's just zoom back out on this a minute. And then ultimately we've got this really, which I'd be looking at this level, this higher time frame support and resistance, which is now support. What do we get? Move above, strong close, big expands higher, price comes back down into this inefficiency here before building. Once again, we've taken external range liquidity here. We're moving to internal range liquidity, which is here. So our expectation is still, if we're going to get any kind of bullish move here, let me just change that to red, to green, sorry. Oh, no, changed the wrong thing. That doesn't matter. You guys will know. At least the arrow should. Oh, no, there it is. The arrow should at least dictate. But that's what I'd be looking for at the moment as this session develops. I think we could get a bit of consolidation here, though, because we've had that sell-off in Asia coming in. But that's what I would look at. Ryan Baptiste, do you know what, mate? We've got a few minutes at the end. Let's take a look at the near chart, shall we? I think near will probably be as pretty clear as a chart that we've got. So let's just do a very, very quick top down together, yeah, and then see how we can put that into potential setups. So let's have a look here. You're very welcome, mate. We will draw a line under that today, guys, because we'll keep this session just under an hour. Then I hope, as long as I don't ramble too much. But I think actually Ryan brings up a good point here. I think, especially for anybody new to the stream, it can be an interesting exercise. So daily chart. Oh man, yeah, we missed something here, didn't we? See, that's the thing. Sometimes there's so many of these assets kicking around, or these pairs. Sorry. So what are we discussing here? Now, this for me is really, really clear because we've got a really, really clear trading dealing range here, right? Now, when we're really, really bullish, price doesn't have to come down into discount, right? But we want it to, right? So what I'd be looking for here is I'd be looking for this at least. I'd be saying, look, on a daily scale, that's my real target here. We have got this fair value gap here, right? That was formed on the close of yesterday's candle. And this can be significant because it's not confirmed yet, but if the day closes here below this, and that becomes an inverse fair value gap, right, then that's something that I'd be looking to say, okay, well, I think that means that we're definitely going to draw down lower into here, maybe even back down into discount, right? So yeah, for me that's quite clear at the moment actually. So let's then drop down to our hourly. Here we go. So I wouldn't have, I mean, I don't really trade these over the weekend, although as you can see here, you do sometimes get some really lovely price action. Um, as I'm looking at this now, Ryan, in truth, what I'm saying to myself is, okay, well, where's the dealing range higher? I think this is kind of the cleanest one here. If we kind of take it from this low, because we've taken liquidity here, obviously taken liquidity above these highs, you could kind of come back down to this one, I suppose, but I think this one is actually quite clean. So our kind of we would have kind of been slightly higher on the risk profile here because let's remember, I should change that back to grey at the moment because that's not actually a confirmed inverse fair value gap until we close below it on a daily scale, until we get today's close, right? However, the fact that it's really kind of carved through it, we don't want to read too much in that because we've all seen it. You can get these really big recoveries, right? Even this one here, look, price looks like it's really ripping through, looks like you're bound to get a close, right? And it just nips back within inside the range. So for me, where's the obvious liquidity resting here? Kind of below these lows. Now, I know that one was taken, but that one wasn't, nor that one, right? So from here, you'll see on my chart sometimes, and certainly on other people's charts, you just see some dollar signs. Beautiful. So that for me is, is a really key area that price is going to look to run. Now I'm going to delete this for a minute and just show you something very quickly as we end, right? That can really help play into bias. Now, if you're ever, if you're ever unsure, you see this breakdown here, and you're kind of saying to yourself, okay, well, what's going to give me conviction to enter here, especially if I'm the wrong side of this premium discount range? Well, remember, like I was saying about consolidations, right? So when we look at this area here, yeah, and even if we just make an allowance for the bodies, what you want to do, let's just do that in bright red or pink, yeah, is these down close candles should support price higher, right? That's our theory. So when price comes down here, fails to get support, once again, see that really strong close through? What we're then looking to do here is say, okay, we've got the strong close through. If we think price is really chasing down these lows, or possibly the liquidity below, aligned with our higher time frame bias, the fact that we know that this is part of a larger corrective move, then quite simply, we just kind of follow our same principles, right? I'll do this kind of in a black just so it stands out a bit more. But the idea is the same, right? We've drawn back up into this fair value gap, right? What are we then doing? We're then attacking external liquidity, right? Internal liquidity in the form of the fair value gap to external liquidity in the form of the swing low. From the swing low, external liquidity back to internal. Now we're chasing down this external liquidity here. So I wouldn't recommend taking this trade personally because we're so low in the move now. But this here, if you say we have the conviction that price is going down here, right, then we've got a couple of things that can be on our side here. If we wanted to see a move like this, and again, I'm not advocating this, guys, because we're very, very low in this move now. We don't know if we're finding support at this kind of original consolidation area. But what we would do is overlay the same principles, which is areas that should have formed as support should now work as resistance, right? So a draw into this area, also into our fair value gap and into our order block here, or this consolidation here, meaning that we should be able to place our stop loss up here and chase price down a little bit lower. But like I say, I wasn't a seller on this, but I would have loved to get involved in this move. London, or really ideally, Monday was the play. Once we ran the high, we got a lovely breakdown in the day. We got a return to our fair value gap, external to internal. This just set up so beautifully, I would imagine, for a short. Let's have a quick look before we finish up so that I'm not just rambling for no reason. But this fair value gap here, we're in our New York session here. We break down in London here. New York starts here. So we're looking immediately for our fair value gap, right? Again, this took the high down to the low, right? So this high was swept. This low was swept. So this becomes like a low. Here we go, dealing range, right? Now, the thing that we would have wanted here is we really would have wanted to see this draw in a little bit deeper, right? So you can see, again, especially with crypto, you don't always get the moves as clean as you do on traditional markets. However, you can at least say you're up in that high probability area, and then you're dropping down to a 5-minute chart. And the key thing here is you're not just kind of blindly entering. What you're saying to yourself is, okay, well, what I'm actually looking to do here is, execute. Oh, come back here. So we draw back into this area. We know it's not quite up in premium, right? However, what we do know is that if we expect this thing to move lower, we can wait for it to give us an indication that it's going to do so, okay? And that comes in the form of sweeping liquidity from the highs, shifting structure lower, and then we want to find either a breaker, so down close candle here, that drives price up to take liquidity, or we're looking at this displacement leg and we're looking to find our array. So that could be the breaker, can be a fair value gap. You see, we don't actually get a fair value gap in we do one up here, which we don't tag. But that's the kind of principle. In my old teaching system, to really simplify it for people, I used to use this, which I used to call a breaker line. Now, you get a worse risk to reward, but the idea is that the market structure shift or break line would get you in here in two different opportunities. One, you'd wait for the close below, not the trade below, and then you set your limit order on this line with your stop loss above the previous swing high. So you would have got tagged in here, also a little bit further down there as well. Stop loss goes here, right? And then obviously we've got our predetermined target down here, which is just over 2R. So look, I really hope that's been useful, guys. I know, again, it's just rattled just slightly over an hour, but actually I think it was really good of Ryan to come in with that last request, because it kind of helped us just do another top down that will hopefully help kind of cement that side for bias. However you're looking to execute, I think the messaging today is just make sure you've got that high time frame view on price. All right, guys, it's been really, really lovely. Thank you so much. Loads of you tuned in again today. I'm going to be live again tomorrow. I think we are back to our midday UTC tomorrow, but I'll confirm and send everything out on YouTube and on Twitter in the morning. All right, guys, huge shout out to you all. Always remember, keep one eye on traditional markets as well, what the DXY is doing, the dollar index. It's not a set in stone, but the stronger the dollar index, normally the weaker the markets are for risk assets, and that's things like the S&P 500, ES, obviously any dollar correlated pair like Euro USD, but it can also translate into cryptocurrency as well. All right, guys, have a fantastic week. Hope to see some of you tomorrow. And if not, I will catch you legends either on Thursday or again next week. Take care, guys.